Happy Friday, Pat. We made it. We made it through another week.
Hey, buddy. How you doing?
Barely.
I agree.
Can't
I
complain. I've
agree.
been complaining about the cold. Um, I, uh, I'm heading down to Rocky Point next Saturday, going down to meet some friends down there. I looked at the weather and goes, God, it's only going to be 69.
I know.
So, but
It's been
hey,
cold.
couple things I was experimenting with. When you're gone, um, I always have like Pat on a stick that I can default towards.
Hmm.
And I thought, well, if we get in a situation where both of us can't make it, then we've got to come up with an alternative. So if we're out, you don't have your laptop and I don't have mine, we can phone it in, and then we can have people run the software for us for the chat, and then we'll have some stunt doubles. Um, I mean, it's as if we've never left.
Yeah,
So,
exactly.
so
I think viewership would go up tremendously.
yeah. I mean, the likeness is uncanny. So.
It
Hi,
is.
Jackie. Hey, and Ruby's on. Here we go. Party has started already. So, but yeah, well, you've always got to look ahead and have a plan B. That's the way I see things. So
I agree.
we're prepared. But speaking of being prepared, you're going to share with us. I'm going to jump to you after I go through a couple numbers. But good God, Cato, you're not kidding, right? I mean,
It's amazing.
yeah. So I work on some things too hard for all the wrong reasons. Interest rates, bad week for rates. So what I thought I'd do, Pat, I'm going to run through some numbers, not because I expect seeing any numbers change today, although there were a couple, but I want to kind of establish a benchmark. Here's where we're at. Now let's watch the next couple of weeks and see what the impact is. So the first thing I'm looking at is the 7-day moving average, right? And
Hmm.
saying, well, new listings have been coming down, surprisingly, and now sales are already starting to come down on the 7-day moving average. But we got to get past Monday and Tuesday for this to really spit out the Super Bowl. You know what I mean? So this is something we want to watch. I want to watch the gap, because last time that we had rates go up, the gap between number of homes under contract and number of new listings grew quite a bit. So
Hmm.
as you can see right here. So we got to keep our eye on that and see what's going on. The other thing I want to do is I want to look at the CMI. So if you see red, then that means that it's more in favor of buyers than it is for sellers. So are we going to see next week more red numbers than we are today? Chandler's still almost the bell of the ball at 169, with Fountain Hills at 170, but these are going to lag a little bit. So we'll see what happens to that, because we know the closer we get to 7, the more sales slow down, right? This is kind of like my 7-day moving average. This is new listings. So it shows this week, this year, and then last year before. So we're down at 1,794. So these guys that are going, listings are up 190%, we're going to crash. Here's where our new listings are, folks. They're 1794. They're not coming up. And
Yep.
now, with rates going up even higher, rate lock is going to be even more pronounced.
Correct.
And this one, pending listings. How many listings are under contract right now? It's been a pretty good month, not
Hmm.
historically, but as far as an incline. So if we go and look at our favorite number of 2008, which is now this one here, we started seeing pending listings going up too, but they only got up like 4,000, where today we're at 5,312. So 2007, they were kind of up in the stratosphere. And I think 2006 was the crazy year where everybody was buying. You can see that. So 2006 was just as crazy as 21 and 22. The other
Hmm.
thing I want to watch is this one, the demand index. Remember, it's just been kind of been hanging in this little zone right here.
Yep.
And so we want to see if we're going to end up with any kind of a gap. I don't expect a gap this severe. The gap where the blue line is supply and the red line is demand tank. We're still seeing, and this lags about a week, but demand has gone up just a little bit last week. I expect that to come down. Listings are going down. So is it possible that we're going to have two lines heading in the same direction? So that's what I want to watch for now that we've got these new
Well,
listings. I
that
mean,
chart just seems like it's a summary of the market where everything is just locked.
yeah, we're just we're
That's
stuck.
a beautiful summary of there's no discrepancy. It's like supply demand right here, and it's like okay,
Yeah,
right there. It's
yeah,
amazing.
they're balanced, but we're still seeing some activity out there that surprises us as far as multiple offers on houses. That
Oh
kind of
yeah,
in the 500,000 range. It's like really, so because they're just not coming up.
yeah.
You're waiting for them. Boy, I hope this neighborhood gets five more and you get one. And so tell us what happened to these wonderful rates today. It looked like they jumped up of 6.75 to 6.8.
Yeah, I mean, right now today, I mean, we had the U.S. Treasury. It was a 381, so tipped out at 390 today. I mean, you can see right here. If I can blow this up, can't think. I think am I doing it the right way? Yeah, I mean,
Yeah, there you
basically,
go.
there we go. Let me back this up
Oop,
here.
that's a little
Sorry.
too much.
Yeah, it's a little too. Um, but we saw this right in here. Where this little increase. This is right here, just before the rates. These are rates actually. This is
Okay.
what Barry calls a morning star, kind of morning Death Star. He had a feeling that rates were going to move up after this little right here at the bottom before we saw a move. It was just kind of we saw a tick up, tick down, and he calls it the morning Death Star, and it's just a precursor to the fact that rates will probably run a little higher. But yeah, we've had a run since February 1st after the employment numbers, and the Feds, they just like you said last week, the market had just kind of realized they're not fighting the Fed anymore. They're kind of throwing in the towel. The Feds will have to raise rates to cool the economy even further, and it's been this battle back and forth, and basically the futures have priced in over the last couple of weeks that rates are going to go up. So the move has been pretty swift because we've seen rates move from 599 to about I'm getting right now. I mean, six and five ace. So that's technically a couple $100. You move from say 599 to say six and five ace. That's about let me see here about 120, about 100, give or take about $200 difference in monthly payment. So that does have an effect, certainly on it. But after the strong jobs report, the Feds are just talking tough now. They're just you get this one Bullard said he wants to see the federal fund rate at 7%, the target. So
Wow.
I
Ooh,
mean,
that's
I mean, and the thing of it is, he's been kind of this bully. He's kind of like the tough guy on the Feds, so to speak. I mean, he's kind of like an outlier, is what Barry says. And Barry said after being wrong for so long, they're just trying not to make the same mistake again. And they're just talking tough. They're kind of jawboning right now. And Barry feels that come March 10th and March 14th, we got the jobs report coming out on March 10th, and should be more favorable because there are some adjustments being made. And then March 14th, we get the CPI reading. So we've got a couple of weeks of where we're probably going to see probably a push up higher in rates. But as hopefully this news blows over. The market does look out 4 or 5 months ahead. So it hasn't been easy. Like you said, you got people. I'm sure you got lenders quoting into the sevens. We're in the mid sixes right now. And just over the last couple weeks, that's 5/8 of a point. That's a couple $100 a month.
well, and it's interesting, and I made the comment last week. I said, we know what we know, and we don't know what we don't
Yeah,
know. And we do know that when we start knocking on seven's door, that things screech to a halt. What we don't know is the first time it happened, because it was such a shock. We went from 3.5 to 6.5 and then 7,
yeah,
that prices fell dramatically. And
yeah.
so um, did
I think people have to readjust their.
has all the juice been squeezed out of the lemon? I guess is what I want to ask. Because this is what we saw. So, I don't expect another huge fall here, you know, coming down now because we're up. And Jackie's saying, no, I don't feel it's going to be the same. But I think, at what we're going to see is, list pricings will come down. They've crept up in January and February. So I think, if you're listing your home and you've seen where rates are today, don't expect to get your list price that you probably could have got at the beginning of February. I think that party's over for the short term. In fact, I had a nice young man call me today just before the show, and he said, "Yes, I'll tell you my situation." He told me how much money he had saved for a house, and that he's got incredibly low rent. He's renting an historic home. He's got a roommate. He's only paying $700 a month. His landlord's great, lets him have chickens and everything. He said, "But I'd like to build some equity." And he goes, "What do you think? Is this a good time to buy?" And I said, "No, not for you." He goes, "Really?" I said, "Yeah, not for you, because you've got a very unique situation. Most people that we hear from are stuck in high rent and they're trying to get a payment that's similar to the rent so they can build equity. It's a whole different scenario." I said, "Are you able to save money?" He goes, "Oh, yeah, I'm banking like crazy." I go, "Well, there's your answer. Stay put." I said, "Because I don't see upward pricing pressure getting into 2024. And we could see some relief in rates. That's when you pounce." I said, "But not now." I
Yeah.
said, "God, you're in a great situation. You got, friendly
Yeah.
landlord, low rent. You're saving money." I said, I wouldn't disturb that yet. So, I think that's safe advice. No, you should buy now. Well, not necessarily.
Yeah, I mean, not everybody's in that position. He's $700 a month in rent. He's banking stuff. I mean, wait, think let opportunity come to you versus going out there and forcing it. Some people have to be forced because obviously they're moving or divorce or something, things of that nature. But um,
Yeah, and
you
it'll
know,
become it'll become real clear when you should buy. I mean, he's watching the numbers, he's studying it, he's become a good student of the housing market. So
well,
nothing's gonna surprise him. So,
it's certainly a lot better time. Man, if you were going to buy, it's certainly a lot better than paying 50, 60, $70,000 over the list price. It's just
oh,
common sense. I mean, it was crazy.
no doubt,
But
no doubt.
I think right now you've got the current landscape with the Feds. The market's been kind of, and I kind of sense this. I mean, it just seems like we're in this repricing. You know, they said going back to last year, we've had these events where the market was up 80. The bond market was up 80 basis points or down 80 basis points. Where we were getting these wild swings. Now the market's kind of digested all this stuff, and we're kind of in this quiet, repricing where things the Fed this the ideology of the Fed is kind of spilling over into the markets, and the market's like, okay, let's just ride this out. And we're probably, it seems as though my gut is that we're gonna be in this for a while. They say the soft landing, hard landing. I had one finance guy I was listening to. He goes, we might be in for just a long landing.
Oh, it's
You
a
know,
really long runway.
yeah, yeah. So I mean, it's we're not seeing the capitulation on the market with these rates. I mean, this crazy gyrations. Like today, it was up 16 basis points. I mean, it was just psychotic the last year. See, you get up and you don't know. It's like you just had this, market just puke on you. It's like you got to be kidding me. It's
Yeah.
just like. But now it just seems we're in this uptrend, and what'll break it? I mean, Barry feels that we'll be in this. He goes, there'll be light at the end of the tunnel. Maybe looking toward May. He said May 10th is obviously still that trigger point with the numbers that he feels. So we might be in this
Well,
jostling market for a while.
in the short term, Pat, I think this is what has to change. This is the average list price. So it's been going up, and it's now going to have to go back kind of where it started back here.
Mm-hmm.
So
Yeah.
list pricing, if you're listing your house with rates where they're at, this is not going to happen.
Yeah.
I'm not trying to be doom and gloom, but this getting back up to these levels that we had before 2022, it's not going to happen. Now, a lot of that is simply because people are listing a little higher so they can give you a rate buy down. I get it and all that stuff, but I think that getting down to this level is probably where you should be. when we're facing what we're looking at right now. And Kiddo says, hope all you guys get super busy in a way that's good for families in need of good, affordable home, not just a few looking for a quick buck. Um, you know, we'd love to see some affordability. I agree with you, Cato. I think,
Yeah.
but that comes in many forms. It's a combination of price and rate, and certainly not going to get down to what we saw in the 70s and 80s. That's a greater economic picture for mines better than mine, but it's tough out there, and I think the long runway description that you just talked about, Pat, is probably what we're seeing. It's more like we could be here for a long time,
Yeah.
and we
Yeah. I
may be
just, I,
talking about this in 2024. Well,
yeah.
we're still slow. Okay, all right.
Yeah. It just seems that way. There just doesn't seem to be any catalyst that's going to push us one way or the other. I'm kind of getting
Yeah,
that,
and
that,
there's no quick bucks out there either right now, Cato. There really isn't. It's slow, and it's not
yeah.
a. It never has been a quick buck. I mean, even when in 2021, when things were crazy, you can call it a quick buck, but it was, you had to show 10, how you had to write 10 contracts to get one accepted. There was
Yeah.
nothing quick about that. It was somebody wanted to go see a house, like, okay. Wonder if strong demand will keep things afloat in the market into summer, even with rates increasing. I don't think so. I think this took the wind out of the spring demand unless we see some relief at the end of March, which we might, depending on the unemployment report and CPI. But if things stay here right now, Keenan, I don't see it. I
Yeah.
see it. The spring market is kaput, not devastated, but
Yeah.
it's going to be slow. And but and I'm not against that, because I really I wasn't feeling too good about seeing this surge in list pricing coming up like I just showed you.
hmm
Uh,
It seemed like it was coming pretty quick last month. It was like it came out of nowhere.
yeah, yeah, and they're getting away with it because there's just, like I said earlier in the show, there's no listings out there. It's hard, it's tough,
Yeah.
and now you got higher rates, now you got more rate lock. But I ran into another article, kind of interesting one today too, and gets this top list of 5 small towns in America. Sedona's number one.
Huh.
This was put out by um, it's called Research in a Nutshell. I don't know
I
what
hope
the
the
heck
hell they're
this
not
is.
talking about affordability up there. 'Cause you
There's,
can't.
yeah, it's
You,
not for
you,
affordability, but
it's not for
it's
affordability purposes. That's for damn sure.
saying the
Jesus.
population is 9,700 people. No, let's see. If you were to head west, this town has a population of just 9,700 people. Landed on just about every expert's list in small town America. And although it's small, there's no shortage of things to do. But there's 1,000 Airbnbs up there. That tells you what's going on in the market. So um, it's a great place. Telluride is number 2, and then totally unrelated. Oh, Cato's got a comment here. Quick meaning last couple of years buying and trying to get 50% on their dollars in a few months. Yeah, it was nuts. It was nuts, Cato. It's just I'm glad I'm looking at that in the rearview mirror. We all know about the big grocery merger, and now the Arizona Attorney General is going to look at Albertsons Kroger merger. This is a big deal for Arizona because there are so many Fry's, Safeway, and Albertsons, and if they all get together, they're going to have a 50% market share. Why do I show this? You're going to see some stores in some developments either close or be sold and turned into something else. Usually, in situations like this, they'll turn an old Albertsons into a Rayleigh's or a Bash's or a Food City or a Ranch Market. So, but it's going to take at least a year for them to make a decision. But that's going to be interesting to see what happens in a lot of these where the grocery store is the anchor store, because that's um, man, 50%. I remember when Kroger bought Smith's, Smitty's, and Fry's, they had to disperse everything, and it was a flipping nightmare. A lot of people get laid off when they do that too. They always
Yeah.
tell you they're not, but they do.
Yeah. No doubt.
so, so we don't have any numbers coming out next week, right? Nothing on the
Now we
pipeline.
got the markets closed. We've got, I guess, on Thursday, got the Q1 GDP coming out on Thursday. And then Friday, get the personal consumption PCE numbers coming out, new home sales. So, we're once again, we're just kind of the market's been testing different floors within that range, and I don't expect anything. We're probably going to see upward pressure. We're probably going to see upward pressure on rates until we get past March 10th, and you maybe get a little bit more light at the end of the tunnel. March 10th and March 14th is what Barry's saying, and he says he feels you're going to see more relief come April, May. He goes, there is light at the end of the tunnel with rates, but we are probably going to touch at 7. There's obviously, like I said, lenders at 7, 7.125, 7.25. I'm at 6 5/8, give or take. So it's definitely going to be pushing some people up, because obviously people have got height. I feel bad for the average first time home buyer that's tight debt to income ratio wise. That $200, $250 an extra a month, that all of a sudden pushes people up. It's just a bottom line, sad reality. And, I think the biggest thing, what I've seen over the years, the biggest thing that kind of really jacks up people's DTIs, and I look at the credit reports, and this is the biggest thing, is some of these young kids have got car payments of $600, $700, $800, $900. And that's probably, I just thought about that this morning. I had a loan last year that the wife had a car payment of $900, and the husband had a car payment of $850 or $900. They had about $1,800 in car payments. I got them qualified, but they could have bought so much more had they just had a decent car payment of maybe $300, $400. I know it's tough. I mean, but these people are going out and buying these $60,000, $70,000, $80,000 cars, and they got $800, $900 car payments. And it really comes down to these younger couples that they have no debt. If they are making, the husband's or the wife's making, say, 100, the husband's making 80, making, some of these couples are making decent money that they could qualify. But then the problem is, they got these, they might have 2 car payments, and that really just jacks up the debt to income ratio. And,
these Teslas are not cheap. You're saving money on gas, but you're paying it on the back end. With that car payment, then that's
the biggest thing I've seen.
The other thing too is, Pat, is credit cards. With the interest rates going up like they are, your minimum payment's now pretty doggone huge. So you got to scale those things back and put them in a drawer if you can. And get yourself ready for the end of the year to get in a position to buy. And if you are going to sit out the market right now, don't just sit it out and keep the status quo. Sit out the market, but make moves and steps for it easier to get qualified. And it's hard to get out from underneath the car payment. You know what I mean?
Yeah, no, I agree.
It's hard to sell a car that you spent $40,000 on. And I'm trying to find a different truck, and every time I look, I go, I think I'll just maintain this one. Because it's not money ahead. So we should get the dynamic duo on the Friday stream. Cato, we've talked about that, but sometimes, it's hard enough to get just Pat and I together at 3:00. And so when you try to get 4 people on at the same time, especially when they're out there in the market, it can be a scheduling nightmare. That's why we pre-record it to put it out on Thursdays at 6:00. And
you and I just need our me time. Just you and I sometimes. Just you and me.
Yeah.
We just that's just, it's just we need some quality time together.
Don't make this creepy, Pat. But we've been doing this for a long time, and I remember you saying, God, I got to get on at 3:00, and we just kept doing it, and it got to where it just turned into a habit. 3:00, got to get on there. And Pedro here says got to get his coffee.
No, I just did. It's fun to just try to.
Jackie says the McSmith and McGraw is cute. So Pat's the Irish guy. I've got way too much German in me to say I'm Irish, just because my last name is McHone, but it's Scottish, Irish, Welsh, and my mom was like full blown German.
Well, I always say I'm half Irish and half Polish. I trip over my feet, and then I get pissed.
So McGrath, I like that. So well, look, let's have a good weekend. And I don't really have anything major planned. Hopefully I'm going to show house or two next Saturday. I'll be here next Friday for the show, but I'll be live on Monday. Might have something coming out Sunday night. We'll see. I don't want to spit anything out unless there's any actual news to share. But we're going to be continuing this Friday show until God knows when, and keep plugging away. And appreciate everybody watching. Our
Thank you.
millions and
Thanks,
millions
millions.
of viewers. And
There
if
you
you
go.
like the show, push the like button.
Yeah, exactly. All right, buddy.
You
Ciao.
Pat.